Well, welcome back, traders. Today is the 3rd of January. It's about 5:20 in the morning a.m., about 2 hours before the market opens here, Mountain Time, my time. Brand new, fresh trading year in front of us here. And 2021 is done and dusted. The last couple of weeks, we've had some pretty good success. Well, we've had some amazing success with our 0DTs. I don't think we've had a single losing 0DT over the last couple of weeks, but boy, it's been tough. Very, very light liquidity, of course, at the end of the year, starting with the Christmas holiday and carrying all the way through last Friday. So we are back to hopefully a little bit more of the norm as we start this week. We're still not quite into the brand new earnings season, so we don't quite have as many trading opportunities to look at quite yet, but we do have a pretty full agenda. And as you can see, obviously, we have still a very full model portfolio of open positions that we are continuing to work. So let's start there, and then we'll go through the week. And in terms of looking at just kind of what we're going to be working on this week going forward, in addition to what we already have here. We'll start just at the top, work our way down. Futu, one of my favorite trading strategies out there. It's a leaps covered right. We've got them working with puts and calls at various times. The Futu trade happens to be with a call. It's more of a bullish trade. We tried to catch a bottom down here. Felt like we had a bottom down here and that it was going to start moving up a little bit. It's been a little bit volatile, but it has been a cash flow machine for us. Again, if we come back, let's look at our history there on Futu. You can see we started that on December 7th, and if we eliminate the long put that we own right there, you can see we brought in just about $700 of cash flow on that so far. We've got another covered position expiring this week at 42.50, and the stock is at 43.30, so it's pretty safe in terms of this trade would make us money if Futu went up. It would make us money if Futu went sideways. It would even make us money if Futu went down a little bit in price. $227 of extrinsic value still left in that trade for a $2,000 trade. For a $2,000 trade that we initiated on December the 7th, to have already brought in $700 of income and still be in a position to continue to cash flow for us. Tough to get better than that, guys. So the Futu trade really looking solid. Our Wish trade is our little $20 gamble. We got 46 days to hold this option. It was a $20 option. So we'll see if the scan was correct. We picked up a scan of unusual option activity. Bunch of $5 calls being bought on Wish here in the month of January. So we'll see if anything pans out there. It is a $20 trade. PPG, this is our other leaps covered right. This one happens to be to the call side as well. And I won't get into the accounting details of this also, but it has been a cash flow machine for us also. About $2,400 into that trade. And this is even a little bit safer than the Futu trade. Buck 72 or so is where PPG is at right now, and our cover is at 162. So $10 of safety margin there in that trade, and it does still have $106 of cash flow left in it, although that is an 18-day option. So that's been a good trade for us. I think we'll continue to let that work for a little bit longer before we potentially look to take our profits on PPG. GM, very sort of just stodgy stock for such a long time, and now all of a sudden it's catching fire here. It has really, and with that, of course, it has pumped up the IV on the stock as well. It has been a while. Let's take a look at IV here. It has been a while since we've been up this high on GM, and we're just taking advantage of that here. Credit strangle, undefined risk trade. It looks really solid right here. It does expire on Friday. So we'll let that continue to work. Looks really good right here for right now. CL, this is our oil trade. Oil only has the monthly options, and so we don't really like to trade them when they're out further than about 21 days of maturity date. This got into our window of opportunity last week. We did put a trade on here. We just have the call side on right now. We're going to talk about that here when we get into our week's agenda coming up here. And this coming Wednesday, January the 5th, we may look to enhance that trade as well. Our lithium trade, I've wanted to get some lithium exposure in my portfolio for quite a while. And I think that LTHM, Livent Corp, is a little bit more leverage, maybe a little bit more efficient way to do that than actually the metal itself. Don't really know on this darn thing where a good entry point is. We thought down here at 22 would be a good entry point. I tried to be a little bit conservative in that and go down to 20. It's just a wheel trade, basically a cash secured put wheel trade on here. That might be too low. I don't know that in 18 days we're going to get down to 20. Maybe we do, maybe we don't. The cash flow on it was pretty good. I only put up $670 and brought in $52 on the cash flow, but we'll see how that progresses going forward. The SCCX trade, I don't really like the smalls that much, but this was a currency, a cryptocurrency trade. This is the smalls that are available through a couple different brokerage firms. No options available on this, so it's a purely directional trade. That's something that I may look to actually take profits on today if I can in fact get that $30. It'd be a 3% return over the last couple of days that we've held that. Don't generally like just purely directional trades without the ability to cash flow them using options. Be Big is an interesting trade. Probably the meme, I believe, one of the memes of all meme stocks out there, really. If you look at the chart, you can almost know that instantaneously when you look at the chart pattern here. But it's one of the few pure plays on sort of the trifecta of what is really exciting the meme traders today, and that is NFTs, it's cryptocurrencies, and it's just also dealing with the metaverse as well. So those are the three hot topics. This is a good way to leverage it. I might have gone a little bit too low there. Basically, again, it's just a cash secured put trade at $2. And I did 5 contracts, so that'd be 500 shares. But 500 shares at $2, it's pretty well positioned for my account size. I don't know if we're going to get down there or not, but if we do, I would take 500 shares of that. Again, it is optionable, and we can cash flow this. It does have cash flow potential on it. So it would be interesting to get a equity position there. We traded coin last week, and that was basically just a technical trade based off of Bitcoin's price action as well. Full iron condor that we have on that now, that does expire this Friday as well. This was a great trade. Brought in $114 on a $1,000 trade, $1,000 capital commitment trade. So about 11% potential ROI on the trade if it does fulfill for us this coming Friday. ABBV, this is AbbVie, and boy, my goodness, this thing has just continued to push and push and push. Now it's starting to I was going to say crater. It's definitely not cratering yet, but it is at least pausing right here. Everything that we've looked at technically on this says that it is overextended here, and that was essentially what we played here on ABBV. We're a little close, $1.35 is where the stock's at, and our short leg is at 138, but it looks pretty solid right here. We're about at a 50% capture rate, and if we needed to, we've got some pretty good expirations. We do have weeklies on this. And the only thing really that we're running up against here would be earnings coming out on February 2nd. So I obviously like to be out of the trade, but that's a long time for us in terms of trader horizons. February 2nd, almost a month out. But we do have the ability to roll this should we need to. And I'm going to take a look here today on Monday at potentially putting a put leg in here, but boy, I want to be careful with the snapback risk that you have on something like this of dropping a put leg in there. But we'll take a look at that and continue to work that as it goes forward. We do have we have quite a few actually non-correlated assets inside of our model portfolio. We'll start right here with corn. And we just have the call leg on corn right here. Now we've got about 18 days to go in this, and this is about the window as well on these softs, the commodity softs that we like to get into. I don't think we get paid. I don't think we get paid for the risk that we take if we are in these positions further out than 21 days, and they do only have monthly options. So that's a challenge that we have with those, but it looks pretty solid right now. I don't know if we're going to have the ability to get a put leg in here, but I do want to look at that today as well. So that's going to be something that we're going to be working on as well today. The wheat trade, so a similar situation. It does have 18 days to go to expiration, but we have been able to get in both of the legs on that. Credit strangle on that. And again, it is pretty tough to beat the ROI potential of wheat. Wheat is... it's always up there. It's always up there pretty darn good. I put about $1,500 into the trade, brought in $275 of income on the trade for what was essentially a 21-day trade. Put that on last week. So that's a pretty good ROI if you run the numbers on that. But wheat can be volatile, as you can see here. We got pretty good strikes in, and so I think we're pretty good on that right now. We'll just continue to let that one work. So again, on the corn, we're going to try to get that corresponding put leg in today. We'll see how that goes. We do have some currency trades as well, non-correlated assets. Always love to mix it up with the commodities and with the currencies. These are very straightforward trades. This is on the Canadian dollar. And, you know, the Canadian dollar has just gotten beaten up down here quite a bit. And we have said that we would be interested in owning or being long one contract down here at this specific price. We're quite a ways away from that right now if we take a look at it with not too much time to go. So that trade looks like, you know, depending on how you look at it, for better or worse, that we probably won't get exercised on that, but you never know. And I guess the good thing is that we're bringing in $90 of income on a $1,500 investment in a 1 week period of time, even if we don't get assigned. So the income on, and that's the ideal wheel trade, right? Is that you're very happy with the income that you make if you don't get assigned. If you do get assigned on this, my goodness, again, this is about a $1,500, $1,600 position to be margin-wise, to be long one of these Canadian dollar contracts. Let's say that we were assigned on this. Let's go out to next month and let's sell just the at the money call against that. You can see that you would bring in about $540. Now that's gross, obviously, right? But let's say $500 of income that you would bring in on that on a $1,500 investment. That's 30% a month in cash flow. Now, again, that doesn't guarantee you a profit because obviously the Canadian dollar could continue to go down. But that's a pretty enticing wheel trade right there, and I like that a lot. VIX, I think that anytime we've had a ton of success with using with trading volatility in the AST program. It does a myriad of things. It smooths out the risk of the overall positions in the account. It smooths out the P&L of the account, and it can add some pretty exciting protection to the account as well. And I always think that it's probably a pretty good idea to try to get long some volatility in your account anytime the market is at an all-time high. And yeah, that's where we've been for a little bit right now, right? So we're working that right now. We are committed right now this week to buy 100 shares of the VIX at $18. We'll just have to see how the market goes this week. We could roll this down to next week's expiration, roll it down to $17.50 and still do it at a slight credit right now. And so again, we like to get long some volatility, but we want to get long the volatility at the right price, right? So that's I think a nice balancing trade for us right there. CVS, excuse me, CVS is a bear market trade that we've done. If you're not familiar with our bear market strategy and the formulation that we use to try to find those opportunities in market, I would recommend that you check out the training video that we have in the bear market trading channel. There's a lot of work that goes into finding these trades. CVS we have just simply pegged as overvalued and overextended here, and it hasn't quite worked for us yet. It's just kind of hanging out right there. Again, we put this on last week, and so we're fairly new into the trade. These trades are usually somewhere around 30 to 45 day long trades. And so we'll continue to let this work a little bit here. We do have, one of the nice things with bear market trades is that we do have the ability to enhance these quite nicely. And this is a trade that we're going to potentially take a look at today as well, adding to the trade. There's some cool things that we can do with these bear market trades where we can enhance the income potential of them without really having to bring a lot of extra buying power to the table. So we'll take a look at that today on CVS. SHW is another bear market trade. It is another trade that we've done our extensive research on and extensively believe that it was overvalued, and it continues to become more overvalued. This darn thing, if you were to look at this stock, you would never think it is a paint company, but it has just absolutely gone from 290 to 355 like a rocket ship, just like a tech stock is what it looks like. But we continue to believe that it's overvalued here as well. We've got 18 days to go in this position as well. And much like the CVS trade today, I think we're going to look at a couple of opportunities here to see if we can enhance the income potential of the trade. And that should help our trade perform a little bit better as well. 6E, this is another currency trade. This is the euro. And this is a little bit different than our other trades. We're not really looking to get assigned here on the euro. You can see that the euro is trading in a fairly tight pattern. It's had some wild moves, and it's really gotten slammed down here with a lot of other currencies. But going back really, I don't know what, to mid-November of last year. Sounds crazy to say last year, right? But mid-November of last year, been in a fairly tight trading range. And so because of that, we're not really looking to get a short position or a long position assigned. It's just a credit strangle. It is a pure theta trade. It is a pure income trade. Put up about $2,600 to bring in $125 of income in the trade. About a 4% ROI for the week. And it's about an 87% probability of success trade. It's a nice little income trade that is non-correlated to equities, or somewhat non-correlated to equities, right? 6J, Japanese yen. We had some tremendous success with trading the yen not too long ago, right in here. We saw that the yen had been just absolutely hammered down here, and we put in a cash secured put, and it bounced back up. We were able to take a nice profit on that trade. Well, guess what? We're right back down there again. We're right back down there again. So once again, we are just trading a straightforward cash secured put. It's just a wheel trade on the Japanese yen here. This would be about a $32. The yen is a little bit more expensive. This would be about a $3,200 margin commitment to be able to go long 1 yen contract. But you can see that it does bring in some nice income for the week here if we don't get assigned, and then B, if you do get assigned on these. Now again, granted, there's only monthlies. There's only monthlies on the yen here, but there's your at the money right there. And if we were to sell an at the money one, you can see we'd bring in darn close to $700 of gross income on that. $700 of income for a $3,200 investment. Nice cash flow machines, nice cash flow vehicles. Currencies can be great cash flow vehicles. And again, anytime you say the words non-correlated to me, something that is something that the Dow can go up or down by 800 points in a day, and that your position is not necessarily directly affected, man, I love those opportunities. So that was another non-correlated trade that we made in. NG, Nat Gas. We have traded over the last year. We have traded some very big positions, $40,000, $50,000 positions in Nat Gas with the 40/40 challenge. But this is a little bit more manageable for most everyone's portfolio. Again, very straightforward trade. Very straightforward trade. This is just a cash secured put trade on Nat Gas. It's about a $4,000 margin commitment to get long 1 contract of Nat Gas. Again, this is a trade that we were shorting it up in here. This was where we were putting our short positions on. Now we're looking at trying to get in a long position here, right? So this is the essence of trading. and you don't really care whether nat gas is up here or down here. They both present pretty much the same opportunity for us. So we'll continue to work that trade a little bit. It is a longer term trade than I would normally care to have on nat gas, but so be it. That's what we're working with option wise here. Is our next option expiration cycle is 23 days. So we'll continue to let that work. And again, the ROI potential on it, whether we get assigned or not, I don't know what that is. Put up about $4 grand, brought in $300, 8-9% or so, something like that in a 1 month period of time. I like it. Our DocuSign trade is a big chunk of my buying power. Almost 10% of my account value here. That was a big hit when we got assigned on that. This was just a wheel trade, but it was done over earnings. Now, we did it on purpose over earnings. We got paid a rich premium, but not rich enough. We got assigned this darn thing at $1.85, $185. And you can see again that big correction as it just got slammed on its earnings. And our concern down here, of course, was, man, is this just the start of something that's going to be really ugly, or is this going to be the bottom, or we're going to try to fight back? Well, so far so good. It has really sort of established this as a bottom. It's been very strong and receptive over the last couple of weeks that we have held it. We've been able to bring in some really good income on this. If you look at our DocuSign trade and we go back over that time frame, let's take a look at when we started our trade. Okay, 12/2 of 2021 is when we started this trade. And then let's just go to trades. Let's see if we can get these things highlighted. There we go. And then let's remove. Here we go. Okay, so there's our assignment right here. Buy to open 100 shares of DocuSign at 185. So let's go ahead and highlight these. And then let's remove our assignment. Right there, $18,500. There we go. You can see that we brought in almost $1,100 of income on this DocuSign trade. So we brought in $1,100 on the trade. We obviously are at 152 right now. We bought it at 185, got assigned at 185. So we still got some work to do here, but our goal was to bring in about $250 a week in income, or $1,000 a month in income on these 100 shares. And we felt like if we could do that consistently, even if DocuSign didn't get back to 185, we'd be able to have a nice income and overall profit on the trade. Honestly thought that it was going to be a bit of a stretch to bring in $250 a week. I think the first week we cash floated, I brought in like $70 or something like that. And I was like, man, this is going to be a tough go. But we've been able to do it. We've had to be a little bit creative with it, do some ratio trades on both the put and the call side. We've got some of those that we've already rolled over to this week from last week. And we've got one more that we need to put on the call side here for this today. But we've got $227 of income potential sitting there ready to go for this week. And we'll be able to add to that a little bit more today as well. So we'll be working on the DocuSign as well. So continuing to be happy with how well DocuSign is holding up, and also very happy with the income that we're bringing in on it. Our SPY trade, we had some very good things happen to us on Friday of last week. One of them being that we had two 4DTE trades, as we always do have two 4DTE trades, but we had one of them on Friday, which was the Q trade that we've been having to roll. I think we were in the third iteration, maybe just the second on the Q, I don't know, but maybe the third iteration of rolls on that. We were able to finally book a nice profit on that on Friday. And so, obviously booking a profit, that in and of itself is nice, but we were also able to free up some buying power because we are still in a roll situation on our 4DTE SPY trade. Our short leg is now all the way up to 472, but you can see the pre-market right now The S&P is up about 25 bucks, and that's reflected right here. We closed at about 475 on Friday, looking to open up at about 477. So we're going to probably need to continue to roll this, but we're getting closer and closer on this. We're getting closer and closer, and the income potential that we're building on this trade is getting to be pretty darn juicy. You can see that's a good looking risk graph. Now it is a credit call spread that very much now looks like a debit put spread, but it still reacts the same way from a P&L standpoint. There's about almost $9,000 of profit potential sitting in this once we can, and I say once we can, not if we can, but once we can get this risk graph to overlap the current market price. It just may take a few more iterations, a few more rolls of this. Now, again, granted, a lot of this profit is the rolling of the debits of the previous trades into this trade, but nevertheless, the trade is looking better and better as we get closer and closer to the actual SPY numbers. So we'll continue to have to work that trade, but it's, again, continue to look better and better from a risk-reward standpoint. And then last but not least is our Microsoft trade. Now, this is a trade that we've been working for some time as well, and it was really, really close to our strike prices. We were at a 345 short call strike on this last week. I was toying with those numbers. We could have waited until Friday. Had we waited until Friday, we wouldn't have needed to do anything with it. It would have been fine. But I saw an opportunity to roll this out, get a lot more safety in it, and also enhance the income potential of the trade as well. And we didn't have to come up with any buying power to do it. So it just made sense to roll that trade. All it's done is two things. One, it has enhanced the income potential of the trade, but B, it's also rolled it out for another week. So we do have 4 days to go in this. Expires on Friday, but it looks really, really solid right now. Okay, that's what we've got already going on. Let's talk about this week's game plan. Today, January the 3rd, Monday, no big news items that are pre-planned that should affect our trading today. We're still not really up into the new earnings seasons yet. So today, our focus will be threefold. In addition to any of the enhancements that we've already talked about here in the portfolio, we'll be looking at initiating a new 0 DTE today. We've had some really good luck with those, even though they've been a challenge over the last couple of weeks. We're going to be initiating a new 4 DTE today on the Qs to replace the Q trade that we took a profit on last week. I'm not going to do a new SPY trade because we've already got one that we're working, and we're going to look at initiating a brand new IWM credit strangle. We had a great week last week. Our goal with those credit strangles on IWM is to bring in about 1% a week of income, 4% a month, 48% a year. It's tough to get that 1% out of them, but we got a little bit better than 1%, about 1.25%, and we did it in 4 days rather than 5. We were able to close that down on a Thursday rather than take it to expiration on Friday. I don't know if we'll have that much luck this week, but we'll give it a shot. Tuesday, tomorrow, January the 4th, we do have jolt job openings that are going to be reported. We've got the ISM manufacturing PMI numbers coming out at about half hour after the market opens up. Those could be market potential movers. We are going to do a 1 DTE on Tuesday. That's a trade that we'll put on with an index on Tuesday that will expire on Wednesday. We've had some pretty darn good luck with those over the last two and a half months. And then we are going to look at 3 or 4 high IV credit trades on Tuesday as bonus trades. We're going to go do some filters and scans for stocks that have the highest IVs in the marketplace. And we're going to look at putting some credit trades or build some credit trades around those. Wednesday, January the 5th, we do have crude oil numbers coming out 1 hour after the cash open. We've got FOMC minutes being released 2 hours before the market close. Those are 2 things that will affect our trades for sure. We do have, as you can see here, a CL trade going on. We've got an oil trade going on. And so we may look on Wednesday to add to or enhance our oil trade, depending on how oil responds to our to the oil inventory numbers on Wednesday on that announcement. Wednesday is also a 0 DTE day, so we'll be doing a 0 DTE as well. Thursday, January the 6th, Little bit more on the news scale. We've got jobless claims coming out an hour before the market opens up. We've got our wheat, soybean, and corn sales numbers also coming out in the morning time. We've got the non-manufacturing PMI number coming out a half hour after the market opens. And then we have nat gas sales numbers, inventory numbers coming out 1 hour after the market opens. All of those are going to potentially affect trades that we are already in. So we'll be watching those news items very carefully. BBBY, Bed Bath & Beyond, is also going to be reporting earnings Thursday before the bell. So we will probably be trading that on Thursday post earnings announcement. We'll trade it after the earnings announcement comes out. And WBA will be reporting earnings after the bell. So we'll be taking a look at both of those for earnings trades on Thursday. We may potentially add to our nat gas trade, enhance that a little bit depending on how nat gas acts after the news release on Thursday as well. And then on Thursday, we will also look to initiate another 1 DTE trade that we will put on late in the day on Thursday using an index for a Friday expiration. Friday, we do have unemployment rate numbers coming out. We got non-farm payroll numbers coming out. Those are going to be biggies. They come out an hour before the market opens up. And on Friday, we do have a 0 DTE set for the day as well. So that's our plan of action for this week, guys, as well as a review of our overall positions. I will see you guys in the trading room here very, very shortly. We're just about an hour and a half away from the market open. So hope you had a great, great Christmas. Hope you had a great New Year's. Excited to be trading back with you guys once again. So we'll see you in the live trading room, guys, here in just about an hour and a half.